Hello and welcome to another update video about Bitcoin. Again, it's going to be a quick middle of the day update, as I've just done it for Ethereum. We haven't really had a lot of new developments on the chart since my last video, so it's just a quick middle of the day update reminder that we are still in a wave 2 in my opinion. As long as we're holding 22k, it's going to be primary expectation that it will turn around eventually in a third wave rally. This wave 2 will most likely play out as an A-B-C structure. The B wave, in my opinion, unfolds as a triangle. At the moment, it looks like it. Alternatively, looking at the microstructure, we could also get a higher B wave into the region all the way up to, doesn't need to go up there, but up to 32,572, and then with a projected sell-off coming in a C wave. Yeah. So this is sort of at the moment the overall assumption. What I want to do in this video, just to look at the 30-minute chart, to look at the waves. Bear in mind, wave structures of lower degree waves, yeah, they are very fragile. Yeah, don't see this necessarily as prediction of the lower level waves, how it will play out. It's more like to track the market, identify trade setups, yeah, give you an idea where we are in this smaller cycle here in the triangle. Waves can change quickly and you have to do adjustments quickly, but they are fun to track. So it's fragile, they are rather unreliable on a lower time frame, especially if we're tracking waves within corrections, especially a triangle. So see it maybe as education and see it also as a bit of fun to track those waves and see how they are playing out. Yeah, there isn't much value. I mean, I'm not saying there isn't much value here. I mean, there isn't really, well, you could say there isn't too much value in tracking really the lowest degree waves within triangle, especially if it's a B wave triangle, if we already have key resistances and supports defined anyway with the help of mathematics and our Fibonacci levels. However, again, it's fun to track, see it a bit as an educational exercise, and sometimes when we have a pattern full, and we have it nearly full, if not full already, we talk about that in this video, then it can be really interesting to be watching the market and wait for the breakout. Yeah, because we have a full triangle pattern basically, yeah, or nearly full. So the idea is that this B wave, as I said, unfolds as a triangle. In a previous video, we tracked it all. So if you want to see how I mapped it out, check out my previous video from today. But I look at it, yeah, and to align it with Ethereum, it could be that we're already in the process of finishing this triangle. Do I believe it? Not necessarily, because I think normally such a triangle would play out over the entire weekend, and then typically towards the end of Sunday, when the weekly candle gets to its end, I've seen it many times, you will start to see some movement and maybe it break. Bear in mind, next week we have, and this is going to be interesting, maybe sideways action is going to continue until then, we are going to see the next Fed meeting. Yeah, I think it's the 2nd of May or the 3rd of May, can't remember, I think 3rd of May. We've got the next Fed meeting, next interest rate decision, that will most likely be the next catalyst. Maybe until then we are going to see this triangle unfold. Now, if I say the pattern is full or nearly full, doesn't mean it needs to break now. A pattern like a triangle can always extend. There's nothing stopping this pattern, even though we have an A, B, C, D, E, maybe complete, yeah, or nearly complete. Again, it could also be A, B, C, D, D, E. That's how I had tracked it in the previous video. Nothing stopping it from doing something more complex like this. Nothing stopping it, but eventually the result should still be a sell-off to the downside, as long as the A wave high stays intact. That's at 30,050 here. The high that was made on the 26th of April. So the actual adjustment that I have made between now and the previous, well, between the video that I've made earlier today and now is I've outlined the possibility on the chart that the low here, Friday's low basically, could already have been the D wave low of the triangle, not the W wave within the D wave, and that the high, which we are putting in place sort of now, could be an E wave and not an X wave. So it could be technically that after this swing high, we break down, and the first indication that this occurs is a break below 28,912. Again, this is very speculative, so don't treat this with necessarily as a prediction. I hate that word anyway. I know, I do have it in the description, but you need to play the game of algorithm, of course. But yeah, it's sort of, we're tracking the market movement. There isn't much edge to be found, in my opinion, here on the lower time frame at the moment. It is, though, the case that a break above the A wave high would basically invalidate, you could say, direct downside potential in the C wave, because the triangle breaks to the upside, so a higher B wave is going to happen first. And it is also the case that below the last swing low here, 28,950, a direct breakout of the triangle to the downside is very, very likely, or is getting at least more likely. But besides that, it's just boring sideways movement, boring movement over the weekend. And eventually, I am looking for still a deeper drop into the yellow support area. But bear in mind, if we get a higher B wave, this could, in a more extreme case, go all the way up to 32,570. Someone asked me, is it possible to even go above that level? What happens if we go above that level? Yes, of course, this is possible. I mean, anything is possible in markets. It's just a question of what should happen. Yeah, what should happen? We are not doing what could happen. We're doing what should happen. Very, very important. So yeah, and based on that, of course, a breakout above 32,570 up here is possible. That would be a direct third wave breakout. Would not even be too surprising, because we obviously look at the higher level count, higher degree count, and you see that the projection is that we are in a third wave. A third wave is a very bullish wave. So, we have to be oriented towards the upside, in my opinion, at the moment, at least until the market tells us, oh, well, it's time to change perspective below 22K, right? And yeah, this is the situation. And bear in mind, you can't predict everything. Yeah, especially unlikely movements cannot really be predicted. But what you cannot predict, you can manage with tactics. Yeah, and that's why everybody would have their own trading plan. Some people might want to hold, longer term positions, core positions that they are not exiting. Prepare, to basically account for those unlikely events that, in a correction, you already rally earlier than anticipated. So at least if you have a core, you are participating, things like that. So again, what you cannot predict, you can manage with tactics. So that's why a plan and strategy is so important. And it's something very important to remember. All right, this is my update about Bitcoin. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.